Very good. I will start. Thank you, and a good evening to everyone. I guess this is a good break from all the Olympic viewing these days. Being from Norway, I can't complain about gold. But gold in a different way is what I'm going to present today. Akobo Minerals, from explorer to producer in Ethiopia. So, Akobo Minerals, we're a Scandinavian-based Ethiopian gold producer and explorer. You can see on the right-hand side that we're listed on the Euronext Stock Exchange. We have some 3,000 shareholders. We also have a significant shareholder from the Ethiopian Sovereign Fund, Ethiopian Investment Holding. We have a company in between in Norway that again owns the local company in Ethiopia, Ethiopian, that holds all the permits and licenses, and some 230 employees based both in Addis, where we have our main office, around 10 employees, and the remaining part is based at site, which is in the Gambela region, very nice, quiet area close to the South Sudanese border. We've been there for 15 years, never had any issues. We're the first international gold mine to start production in Ethiopia since 1993. So we're at the front, we're a first mover. And if you look at industry in general, we're one of the very few juniors to actually progress from a discovery to production. Some say 1 out of 500, others say 1 out of 1,000 actually make it. Akobo is at least that one company. We've done it in a very challenging and difficult environment. That said, an environment that is improving every day in Ethiopia. So we're a small, high-grade deposit. I will tell you a bit more about that. We have a strong local foothold, good working relationship with the authorities, also the Ethiopian Sovereign Fund on the owner side. Very low cost. We have 2 people, myself and my finance manager, outside of Ethiopia, and the rest is in Ethiopia working on the mine or in the office in Ethiopia, in Addis. So we, in addition to the mine, the segele mine that we call it, we have a very exciting upside in the existing 166 square kilometer of exploration license. And we do also have a pending 1,200 square kilometer exploration license that we hope to get the final go on very, very soon. So a strong corporate foundation to support continued growth. We've been through everything you can imagine in Ethiopia from A to Z. So we're ready to expand, ready to do more. Our development is funded through equity partly, and then also a structured gold loan. I will say a few words about that a bit later. But what is probably the most exciting about segele is its high grade. You can see here on the picture on the right-hand side, this is pure gold. We call it the golden wing. Normally, you don't even see gold here on the shaking table. So this is an illustration of what we're working on. It's very high grade. The average is 22.7 gram per ton, and the closest part, the indicated part closest to the surface, holds actually 40.6 gram per ton on average, so extremely high grade. And you can look here on the right-hand side, it's well above industry levels. Usually you mine an underground mine at 5 gram per ton. So this is extremely high grade. We started production back in October 2024. We have a year plus of production, ramping up, steady production these days. The deposit is open at depth, so we will continue to develop this deeper and expand the mineral resource number. And we're quite sure this is an indicative of a larger mineralized system that we are working on. So what's it like to work and invest in Ethiopia? It's not always been easy, but over the last couple of years, really big economic reforms have materialized. The mining is a core pillar in the economy, is prioritized. We've even now established our own offshore account with Standard Bank out of South Africa. We're probably one of the first companies to do that, meaning we can now hold our US dollars offshore. We're also one of the first few companies to be able now to start export of gold. It will be to an LBMA refinery in Switzerland. We are hopefully going to export one of the next batches that we produce from the mine. That will be a first test. We're looking forward to that. That will complete the cycle from production all the way to refinery in Switzerland, and then the dollars back again to our offshore account in South Africa. So a lot of questions over the years. Can you get your money out? Can you get your dollars out? Well, you have the right to repatriate. You have the right to dividend, to repay loans. There is now FX convertibility in place. It might take a bit longer than what we're used to here in the Scandinavian banks, but it's working and it's improving every day. So really a lot of positive developments going on in Ethiopia. And how do you operate in Ethiopia? Well, you have to do it right. Responsible operations is the only way. You can call it ESG, CSR. I like to call it doing it right. So focusing on the safety, on the environmental side. Our underground mine it has a very low environmental footprint. It's not a huge open pit that you normally think of when you think about mining. This is underground, it's small. It's so far gravity based, so we're not using any kind of chemicals. We will that at a later stage, but in a very controlled and a measured way. We do have a predominantly Ethiopian workforce. That's important. That's part of our mandate to hire and train. There are also a lot of great, highly educated people in Ethiopia. So what we're focusing on is a bit on the expat side, related to the underground workings and some of the final refinement on the processing plant. But apart from that, it's an Ethiopian workforce, and we're doing a lot to train and to develop their skills. So the current operations, we've had steady state production for some time. Last couple of months, we've been around 8 kilos. It might go between 6 and 8. It all depends. We're now trying to have that as a consistent level. That's around $900,000 up to 1.3 million per month, depending, of course, on the bit volatile gold price these days. We have an operational break even around 4 kilos. So we've had now a couple of profitable EBITDA quarters behind us, third quarter, fourth quarter, and I would assume also first quarter of this year we'll have a positive EBITDA. As it says here, cash flow positive operations. What is interesting to see, and this is what we get out of the picture on the right hand side bottom, our processing plant, is close to 86% recovery and a very good purity up to 22, 23 carat. So that's pretty top end of the industry, and we're very proud to be able to produce that kind of gold. As I mentioned, we will start some chemical use later this year, maybe. That's the CIL, a cyanide system. That is to increase the recovery a bit further from 86% up to plus 90 or something. That's work in progress. What's the most interesting right now is the vertical shaft we're developing. Right now, we just have 2 winzes or 2 tunnels going into the ore body. You can see that on the illustration on the right-hand side. We have a lot of drill holes you can see that define the ore body. The ore body looks maybe a bit like a dragon going down here, and you can see a vertical shaft going straight down and then into the ore body. That's what we're looking at right now, and we've been developing. You see the progress on the pictures here, all the way from the beginning through to all the fundament, all the cement, everything to the winch, and now also getting down into the shaft to start the sinking. So we're well underway. It's fully funded. We have no major equipment procurement risk. It's all underway. The most important here is that we will increase the capacity significantly from 10 to 20 tons per day up to 100 and 250 tons per day. That's tonnage rock, not ore, of course, but out of that, we expect to get up to 50 kilos a month of gold produced. That's an increase from the 6 to 8 kilos of gold that we have right now. So this is a significant step up. And we're doing this without any major increase in our operating costs. So a lot of this will be pure margin. And you can see that will increase our monthly gold sales from around $1 million to around $8 million at full ramp-up capacity, and of course at the current gold price. So it will replace the Winces, the 2 tons we have now, and it's targeted for commissioning in August, September 2026. So we're soon there. It's getting closer every day, and this is really the next big thing for us. Not to forget, we're still an exploration company. We're an exploration company that will be funded by the cash flow from the mine, the Segele mine. And you can see here the existing license area where it says Segele, Gingibil, Joru. We have high hopes for this area. We've already done a lot of work here for the last 10, 15 years. It's definitely underexplored, and we're the first mover in this area. And we believe there is a big potential to develop this into a 300,000, 500,000, 1 million ounce deposit over time. And you can see also in the top right-hand corner that below what is called Gambella region, that's the new area that we're applying for. The existing license area is all the way to the bottom there. So it's in the same Arabian-Nubian shield. This is where gold is encountered all the way up through Ethiopia, Eritrea, Egypt into Saudi Arabia, where all the big mines are found. So we're in the right geological spot, and we expect this to be a major development area over the next 5, 10, 15, 20 years. So we are positioning ourselves for that. A bit about the gold loan, which is not straightforward. We have borrowed in ounces and we will repay in ounces. Of course, the transaction in itself will happen in dollars and not with suitcases full of gold. But this is to give you an illustration how a gold loan works. So it's an illustration. It's based upon approximately some of the numbers that we have. You can see here, the graph here shows the development of the pre-tax cash generation that we expect from the mine compared to the value development of the gold in dollars, the gold loan in dollars. And you can see here the increase in the value of the deposits, and the cash generation from the deposit is much, much higher than the increase in the value of the gold loan. So this is an important notice. Even though in dollar value, the gold loan has a significant value in itself, absolute value in dollars, compared to what the gold price gives us in cash generation from the Segele project, it's still within a good margin, and the higher the gold price, the better it is for the project. So this is an illustration. It's not a net present value and discounted model. It's give you an understanding on how the increase in the gold price will affect the value of the deposit towards the value of the gold loan. So the higher the gold price, the better it is for the company and the cash flow. And since we're discussing trading and Aksjespareforeningen, and I assume a lot of you listening in is interested in how to trade also. So since we're a Swedish company listed on Euronext Growth in Oslo, you can find normally our ticker at the Avanza Bank, Nordnet Bank, other Nordic banks. But also for international investors, you can find it at Saxo Bank, Interactive, Swissquote, and a few others. So that's the way to go forward. If you like the picture here, those are the gold bars currently or produced last time and ready to be sold to the National Bank in Ethiopia. And hopefully the next batch will be our first export out of Ethiopia. So that will be the next one of the next few milestones that we're working towards. So that's it from me today. I'm happy to take questions or explain more in depth, depending on. Yeah, Oliver, anything from your side?
Yeah, of course. And if I didn't mention that in the beginning, if you guys that's viewing this evening event, you can ask questions in the chat as well. Så på svenska alltså, om ni har några frågor så kan ni ställa dem i vår chattfunktion. Så ska jag se till att framföra dem här till våra talare. But until then, I could ask you a question regarding the current gold price. I mean, obviously we have seen quite a substantial volatility here, and a huge increase in the gold price as well over the last couple of years. I would like to hear your view on this. How do you operate during this? I mean, I get that a higher gold price, of course, should benefit your operations, but I mean, what are the major issues or concerns that you might have regarding this volatility or increased price that you might see?
Sure. So we did our scoping study 4 or 5 years ago based upon a gold price around 750. That was the gold price at that time. Now it's 5,000. Of course, it's a huge increase, and most of that is actually pure margin. Of course, you will pay a bigger royalty because the royalty is based upon your revenue. You will pay more taxes, of course, because you have a higher profit. But the operating side is not really that much affected by the gold price. You could think that over time, gold price increases, the cost of operating is increasing, but we don't really see that, and we don't see that out of Ethiopia. Of course, fuel and the oil price is affecting our operation more because that's the third or second biggest cost for running a mine is diesel to fuel the generators and everything. So the oil price is a bit more important for us on the cost side, while the gold price is the most important than on the revenue side. And volatility, I think we've all seen that both on the gold price and the silver price even more.
Yeah.
We don't have silver; we only have gold in our deposit. So what does it look like going forward? I guess a lot of that depends on what happens in the US, what Donald Trump continues to do, the relationship to China, how much China is willing and trying to break free from the dollar system. So they're buying gold with both hands and more. And that has an impact on the gold price, obviously. And you even see African national banks starting buying gold. So until they sort out what the value of the dollar and the standard of the dollar will be going forward, I think the gold will continue to increase over time, and it's moved more from a speculation object to more of a something else that is part of the development of the currency system, the worldwide currency system that is changing these days.
Yeah, fair enough. I hear you. we got a question here regarding when do you think that you might reach a positive cash flow, and perhaps I could expand that question in terms of, do you see any large upcoming investments?
Sure. So we are already positive, cash flow positive from our operations. That started in the third quarter last year, and we've had a positive cash flow since. We have made most of the investments. We have some minor investments left for the new shaft that's funded. So we're not out looking to raise money to fund the shaft or anything else. So we are in a good position. We have a gold loan that will be repaid by mid-2027. After that, the company will be debt-free unless we choose to do something more that will accelerate the growth and accelerate our operations. But right now, every month we're making money, and every month we're getting closer to the new shaft that will significantly increase the margins for us.
And by new operations, that might include finding yet other areas that you might be able to go for more gold.
Exactly. So that's really where, in my view, the upside lies here. It's not the mine in itself. The mine is there. The mine will produce cash flow. The most interesting part here is what will happen over the next few years from an exploration point of view, where we see significant upside and potential on the exploration side. Of course, that will require some investments. Depends on if you want to do a 5,000-meter drill program, a 20,000-meter drill program, you want to do airborne surveying or just trenching and soil sampling. So we're working a lot on call it a new strategy for how we want to move forward on the exploration side to be very cost efficient and try to pinpoint really where the good locations are in the existing area.
Yeah, all right. And I mean, I guess that you can say that you have transitioned in a way from exploration and now going into production a few quarters ago. What are the biggest operational risks during your, I mean, I might think you can call it a ramp up phase, and what are the major hurdles that you see going forward?
Yeah, so what we've done over the last few years is consistently taking down the operational risk. Every month we produce, every month we do more and improve. We're taking the operational risk lower. Of course, we will never have zero operational risk when it comes to mining in Africa. We don't really have a long list of things we are worried about these days, but you have the normal things that will happen in Ethiopia. There can be insurgencies. There can the Tigray conflict up in the north. It's only a few years ago that there was close to civil war. It's far from us, but still that will affect the whole country. There might be lack of diesel and fuel. Of course, that's a major concern. So we're constantly working on sourcing diesel and fuel because that's not ready available all over. So that's something we get support from the government to be able to run 24/7. So just these logistics and getting things in the country on time. So it's more this planning, make sure we're good at sourcing and getting things through customs, because most of what we need is imported from South Africa or Turkey or other places. There's limited mining service industry in Ethiopia. So nothing major, it's more improving and make sure we don't miss anything in the planning on the planning side.
Yeah, I think that's a great answer. And my next question was obviously regarding the geography where you operate in, but you covered that already. So I guess my last questions would be, I mean, where do you see Akobo in like 5 years?
So we have an ambition to become a leading player in Ethiopia. We're the first new mine to open since 1993. We have an area that is completely underexplored, where we are the first mover. We will at some point look to find a partner, being it strategic or financials, to ramp up much more at some point. So in even 2 years or 5 years, this will be a leading company in Ethiopia within the mining industry. Maybe even more than Ethiopia, we will be looking maybe at other projects in different parts of Ethiopia, maybe outside of Ethiopia, so we can leverage the Akobo platform being a listed company in the junior mining sector. That's not something everyone has, and you can do transactions, you can use your share, or you can attract that kind of good projects out there. So if we're I'm not sure if we're a pure play Ethiopian player in 5 years. Maybe we are, but then maybe on a broader geographic basis in Ethiopia. Maybe we've also sourced a project outside of Ethiopia. If we Will we ever look at the Nordic countries or the Scandinavian countries? I don't know. Time will tell. I'm eager to listen to my fellow colleagues here, what they say about mining and exploration up here, if it's straightforward or more difficult than Ethiopia.
That's great. Good to hear you that you will be staying with us through the night here. Thank you so much, Jorgen, CEO of Akobo Minerals.
Thank you.